checking in on oil. OPEC Plus maintains its current output reduction strategy as inventories, the largest U.S. storage hub, sees its first increase in 8 weeks. Meanwhile, J.P. Morgan pointing to the beginning of demand destruction for oil. And beginning there, Julie, just on the demand picture. So J.P. Morgan's basic argument here is, all right, demand destruction has begun. Consumers are going to the local gas station. They're topping off the tank. They're alarmed by what they see. I'm one of those people topping off the tank who's kind of getting nervous. And given that Q3 spike we saw in gas prices, their point is no surprise. Consumers get nervous, and that starts to dampen demand.
Yeah, I mean, that does seem to be at least what is starting to happen according to that thesis here. And, you know, that inventory increase was interesting. The biggest increase that we saw in 8 weeks in Cushing. Some of the drawdowns in Cushing had been one of the things that have been fueling the increase in oil prices. We talked earlier in the week about also refinery maintenance that causes shutdowns at the refineries. It doesn't look like that is necessarily playing into it as of yet. But nonetheless, all of these cross currents on oil, it feels like, though, like with treasuries, yes, you were seeing a pullback in oil prices here, not just because of the things we mentioned, but also because of broader economic concerns. Is it enough to say all clear on oil prices? Doesn't feel like that yet, just like it doesn't with treasuries. But nonetheless, again, a little relief today, perhaps.
And then seeing, of course, Saudi Arabia and Russia maintaining those supply cuts as well.
Exactly. So all of that may be creating a little bit of a floor under oil, even if it's, you know, not necessarily causing gains in today's session.